Everyone. Great to see all of you here in person and those of you who are online as well. So my name is Priya Yadav, and I am an investor at Mass Ventures. We are an early stage deep tech investor, and we invest in Massachusetts-based startups. Now, I'm very thrilled to serve as your moderator for this session because we're going to have a highly educational, interactive, and fun panel because of the exceptional talent we have on stage. All of our panelists today have broad experiences as operators, founders, and investors. So please welcome Lily Lyman, General Partner _ VC, Renata Marino, founder and CEO of Blazing Babes and venture partner at Going VC Partners, and Mark Crane, partner at General Catalyst. Now, before we get to know our panelists, who are super impressive, by the way, and you're going to agree with me, let's talk a little bit about what you can expect from this panel discussion. As we all know, okay, before doing that, do your poll, okay? We want to know who you are before we tell you more about ourselves. So take a quick minute and just tell us who you are. So as I was saying, the tech industry is rapidly evolving. And for investors, what this means is that we need to have a much broader perspective on investment opportunities and also an understanding of how much more interconnected technology, business, society, and of course, regulations are. So what I hope we can collectively accomplish today is understand how investors navigate this ever-changing landscape by hearing about their experiences, their learnings, and any advice that they have for you. So let's spend the first 45 minutes or so in panel discussion mode, and then maybe the last 10 to 15 minutes, we can take questions from all of you. Sounds like a plan? Okay, great. So let's see. How's the poll looking?
There are definitely people online, several people online, but no polls. So I would just recommend if you ask or keep going.
Sounds good. Any founders here? Startup founders? Okay. Investors? All right. Employees, startup employees? One. Advisors, mentors? Great. And students? Okay. Are you a tech enthusiast? Any of you? All of you? Okay, great. Awesome. Okay, now that we know who you are, let me turn it over to our wonderful panelists. I have a multi-part question for them. Oh, the poll. Okay, great. All right. Sounds good. So we kind of I think a lot of founders here, few employees, I guess. Okay, good. So let me just turn it over to our panelists. Now, for each of you, there's a multi-part questions. All my questions are multi-part questions. So first of all, can you talk to our audience about your background in the tech investment space? And Lily, why don't we start with you?
Sure. Well, thanks for having us. Excited to be here. So my background, I've been an operator, I've been a founder, I've been an angel investor, and then I jumped over to the venture side about 6.5 years ago when I moved back to Boston and joined Underscore. Previously, I'd been out on the West Coast for many years. I was at Facebook or Meta. Facebook when I was there. I was part of the international growth team. So our mandate was how do you get the next billion people on the platform? And so I worked across Facebook, Instagram, WhatsApp, Messenger, largely focused on international growth in emerging markets. And the real problem we were solving was how to get people access to the internet. So it was almost like a startup within Facebook. I had also gotten involved with Yard Ventures, which is Harvard's angel alumni venture group. I served on their first investment committee and started doing angel investing. And that's when I started spending more and more time with early stage founders, looking at pitch decks, things like that, and kind of fell in love with the investing side of things. So as I was moving back to the East Coast, I'm an East Coast native, and thinking about what I was going to do here, I got lucky enough to get introduced to Underscore and fell in love with the community-driven model that we have, the team, the values, and the investing approach. And so I jumped in, as I said, 6.5 years ago.
Great. Thank you. Mark.
I'm a partner at General Catalyst. We are one of a handful of multi-stage venture capital firms. Globally, we invest anywhere that's not China or Russia, literally. And we invest from any stage. So from the ideation stage, we have a tremendous history of ideating and creating companies, specifically here in Boston, actually. Companies like Demandware, companies like Kayak were created in our offices. And then globally as well. So companies like Livongo out in San Francisco in the digital health space on the beginning end of our business. And then we have capital for all those sorts of things from any stage through the IPO now with Samsara for the first time as a firm. We've been very fortunate from our LPs and frankly, the founders that we back to be able to kind of build that platform. And we think about adding products and adding things to our platform in order to serve the founders every single time. That's how we kind of talk about things. We don't talk about assets. We talk about what are the other things that we can be doing for founders. Specifically, my job within General Catalyst, it has moved as we have moved. I've been with the firm for 4.5 years. I'm an investor by training, so I haven't done anything actually hard yet other than look at a whole bunch of people trying to solve hard problems. But I've been with the firm for 4.5 years. I just got back from opening our office in London. I spent 2 years opening our office in London. We have investments historically, but now we've started to grow our ground presence, so to speak, over the past 2 years and out of COVID. My focus areas for the firm, I run cybersecurity for us, and then I spend a lot of my time in our what we call creation. So that's either incubation, creating companies from scratch, or transforming companies that might be at a crossroads, and we can talk more about that. But yeah, that's me, and really looking forward to being here. Thanks for coming, and thanks for having us.
Great. Renata, your background in the tech landscape, and then maybe you could talk about your firm, your fund, and just like Mark did.
Sure. So I'm Renata Marino. I'm Latina, originally from Boston. My background's 28 years in operations. So first investment banking, actually at State Street Capital. I did debt financing back in I don't want to date myself, mid 90s. Worked at Reebok and tech in 99 before they called it tech. They called it .com. I was working for the CEO on footwear tech. So I'm a former athlete and love fitness. So fitness tech, sports tech, not gambling or betting, but the other stuff, the stuff that makes us healthy. Fascinated about performance analytics, which is a big area that I invest in. Moved and went to Booth full time, worked primarily focused in stage gate, new product development. So my roots are within corporate, leading global P&L teams in fitness, life fitness, some durable good companies. So really understanding the voice of the customer back in the early 2000s when tech was just beginning. VC was kind of there with the older crowd, but now it's booming. So really have a strong foundation in what it takes to prove a concept, get customer validation, and really the traditional form of launching a company. Then I moved into entrepreneurship in 2007. I actually was forced out of corporate because I became a new mom and wanted flexibility. And we can talk a little bit more about that. But really loved the entrepreneurial space. Worked for an entrepreneur in Chicago. I'm in Chicago. And then started launching startups, service startups. And then 9 years ago, launched a female founder accelerator called Blazing Babes, where we literally have programming workshops, speaker series, and helped hundreds of women launch businesses from brick and mortar to tech to consulting. And now I'm launching a fund. So I'm a Latina emerging fund manager, raising a $30 million fund, investing in pre-seed and seed stage female-founded startups in femtech and digital health. I come from a medical entrepreneurial family in Boston, where my Mexican father and mother were doctor and nurse and built their practice from scratch. I was born in an attic with mice, and they built their wealth and poured it into the education of their 3 daughters. And so I'm a proud Latina and want to serve women and invest in diverse founders.
That's great. Thank you. And Lily, let's just have you tell us more about your firm, investment thesis, and what kind of startups do you invest in?
Sure. So at Underscore VC, we are a Boston-based early stage firm focused on B2B software. So for us, that means we typically invest in pre-seed, seed stage companies. B2B software generally, that for us tends to look like future of work, vertical SaaS, B2B fintech, and a group called emergent tech, if you will. That's a lot of generative AI and blockchain infrastructure. We invest with what we call a community-driven model to venture. So we're inspired by the world of open source software and this concept of how do you get communities of people working together on a project in an aligned way to build outsized value. And so the way that we do that is we actually give up a percentage of our carry as GPs in the fund to specific advisors around individual portfolio companies, with the thesis being if you can get companies surrounded by the right people at the right time, it'll change the trajectory of their business. And so we spend a lot of time here in the Boston ecosystem in particular. About 60% of our capital is here in Boston. We're very bullish on the ecosystem because of the talent and tech that continually comes through here. We also invest in New York. We do invest globally. We have companies in Texas and Chicago and Europe and Turkey. But we are what we think of as Boston biased or Boston advantaged. We do spend a lot of time at Harvard and MIT and Northeastern and Babson and a lot of the rich academic innovation hubs here in the Boston ecosystem as well. About a third of our portfolio comes from that ecosystem as well.
Great, thank you. Now, could I have each of you also just share a little bit about what's your process to source, vet, and select a particular investment? So, Mark, maybe you can kick us off.
Tough one to answer in a short period of time.
In 3 sentences.
Yeah, 3 sentences.
How do you do your whole job?
Be brief. I'll tweet it. I would say sourcing as a firm, every person at the firm is expected to source in some way, shape, or form. We do not have bias against any sort of founder or where it comes from. Leads from our CEO, Hemant, or one of our founders, David and Joel, get just as much attention as Johnny, who just graduated Harvard and leads our gaming effort and sends me a cybersecurity lead. The next company will be built by people that are orthogonal to the space that they're building in. So I think sourcing is all encompassing. It is the number one thing that we do outside of helping the companies that we invest in grow. It is very, very important. I would say that's like the sourcing thing, and then vetting and doing all those things. Look, we could spend a day on that. But at the end of the day, we are backing people to do unnatural, difficult, and unbelievably hard things, both personally and professionally. That is the number one and most important thing. It always comes back to, do we believe this person against this problem space is unique and their point of view is unique and they're a little bit crazy enough to go do this. That's what we do.
Great. Renata, Lily?
Sure. Okay, so I'm an emerging fund, so this is interesting. So I've spent the past 5 years networking with various VCs across the United States and asked them what their process was. So I've been able to extract best practices from the best and create our own processes. And I was very fortunate enough to have a CFA, almost level 3 at Babson and Masters in Finance, join me this summer. And we created a deal flow pipeline process for vetting. We're going to see 1,000 deals a year with a 1.2% conversion rate with our processes. We've timed it down to the hours, so we know how many hours each person and what the process is for how we're going to source deals. The one challenge I will say is I do want, right now I'm very fortunate. I went to Bowdoin and University of Chicago Booth, have incredible access to iLabs, Harvard iLabs, Techstars Boston, New Venture Challenge at Booth, which is one of the top, highly vetted. We see top deal flow from pre-seed stage, and we want to take lead positions in pre-seed because we're a smaller fund. However, the markets that I feel like are untapped are these second-tier markets, which are in states that don't have the accelerators, and some of the diverse founders maybe don't understand how to put a pitch deck together, don't get into Techstars. So I'm tasked with, how do we get to Maine? How do we get to Rhode Island? How do we get to Atlanta? How do we get to these markets other than just coming through on our website and just going through the filtering process of, do you actually have, an MVP? So that's one of the things that I really am striving for, is how do we access the second tier market? And I don't mean to be belittle it, not the Harvards and not the Booths, but the people that don't have that, let's call it a network.
That's great.
Yeah.
And Lily?
Not too dissimilar from what Mark said. I mean, I think at earliest stages, it's all about people. And if you're investing at pre-seed seed, it's about knowing the right people at the earliest moment. And so for us, a lot of our investments come from our broader, what we call our core community. And so our community are people like the VP of engineering at Toast and the head of product at HubSpot and the chief marketing person at Klaviyo, and both sort of the senior executives, but also sort of folks all across the organization. And part of our job is to sort of sniff out who are the entrepreneurial, interesting folks who are in the mix, and so that they will either introduce us to people very early, or what we've found is that a lot of those people then go spin out and start companies. Mm-hmm. And so, some of our portfolio companies have been started by people who've been coming to our events and engaged in our community for years, and we're their first call. We talk about making it awkward. You should have the relationship close enough with the right person that if they start a company and they don't come to you for fundraising, it's weird. And so that's part of my job is to build those relationships and sort of try to have an intuition on who are going to be the right founders. And because as Mark said, I think the most important qualifying thing that we look at is what makes this team uniquely qualified to go after the problem they're solving. We also look at, the market and the problem they're solving, and is it really big? And can you build something here that could deliver venture scale returns? And we can talk about that and what that looks like. Is their thesis on how they would go after that market unique? Is there something about their value prop that's going to stand out? Why is that approach going to win? But at the earliest stages, it's pretty clear that the markets shift. We've seen a lot of shifts in the last 18 months, but markets will always change. Product will also always change. And so the constant thing that you're backing is the team. And then we've built out a little bit of a rubric around what are the attributes you look for in a team. And you have to be careful on that, because I think one of the problems in venture is that we have a lot of pattern recognition.
Yes.
That's how we make decisions. You sort of say, okay, I can see how that will work. And so we lean on past examples. That can lead to bias. That can be challenging. So one of the things that we've tried to do is articulate the attributes that we look for, but get down to the meat of what those attributes are, not how they're manifested. So it's not a certain extroverted, charismatic, blah, 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 blah person. Yeah, that's one profile. But you can also have a introverted, super technical nerd from this corner of this institution, but they might actually still have all the right attributes needed to be incredibly successful. And the way that we articulate some of those attributes, we break it down, and we're big on frameworks. We talk about the 5 A's. Let's see if I can remember them. So the biggest one's attitude. So do you have that entrepreneurial grit? I can, as you said, be a little bit crazy, do the hard things, get over the mountain that it takes to start an early stage company. Do you have the ability? So do you have a track record in the space that you're building in, whether it's through research or years of industry experience? Do you have the aptitude? And so thinking about pace of learning is something that's really important that we try to suss out. Are you a learner? Can you understand how to solve problems? Do you take feedback and move on to the next thing? And I think pace of learning is a really important attribute, because as we said, markets and products will change. The ability to attract talent around you, so attractor. So you got to be able to attract your first teammates, your first customers, your investors, your advisors. Again, there's lots of different ways that people can be attractors, but can they kind of get people excited about what they're building to sort of fuel that momentum? And then authenticity and awareness, sort of our last bucket of A's. I don't know, that might be 6. But basically, do you know what you're good at? Do you know what you're not good at? Can you surround yourself with people who complement you in order to balance that out? And are you authentic? I think one of the things I ask founders is, if you weren't going after this problem, what would you be doing? And if the answer is totally unrelated, I'd be doing private equity here. I'm like, that sounds really disjointed from that thing that you just pitched me that you're so passionate about. And so testing, like, why is this the problem that they want to dedicate their life to? And how dedicated are they to it is a big thing we try to tease out in our process.
Great. Thanks, Lily. You also helped set the stage for the next question. As you see, right, capital requirements are different for startups at different stages. So just Lily talked a lot about the early stage. So Mark, can I just have you elaborate on the tension that happens between early and late stage?
Sure. So I guess early stage, like Lily said, we are solving for people. We are solving for founder. We are solving for, I like that framework. I won't steal it, or I'll give credit. But I would say we are certainly looking for that. And at the growth stage, you've stopped looking for founder market fit and product market fit, and now you're looking for go-to-market fit. And then for us, like, there's lots of different types of growth investors. We think about growth investing as, can this company be a platform? So the first thing that you are doing, it is working. Can we hit the more button, for lack of a more eloquent term? And can we put a whole bunch of wood behind that, and can that work? And then what are the avenues, and what are the second, third, fourth, fifth order effects of this business that you can possibly go do? So the example I'll give you is, I'm on the board of a cybersecurity insurance company. We are an insurance company first, but we have started to sell software to our customers that attaches on top of an insurance policy that makes them safer. That is the next generation of our business. And the third generation of our business is ultimately, hopefully, and the highest purpose of this business is becoming the distributor of other cybersecurity products, basically a marketplace saying, we know this product works for your type of business. Here are the 3 options. By the way, buy them through us. Don't buy them through a cybersecurity channel, which is basically kind of like a mafia. I didn't say that out loud, but I just, but those are the third, fourth, fifth order effects. So that is the tension between early stage and growth stage, is that you are looking for things. And then the last part is there is a bar. There are numbers now. There are comps that are publicly traded. There are comps that are privately traded. You're constantly looking against your peers, whether you believe that that can be as good of an outcome as deploying that amount of capital across 20 early stage startups that could possibly be just as big. And so we still think just as big when we do growth. But I would say the process is different and the bar is just as high. It's just a different type of bar, if that makes sense. And the last part is we think about growth stage investing. We'll re-underwrite it every time it comes in through our door. So we don't just like, we check in, we think about like whether or not we're going to do our pro rata here, because if we do it here, we can't do it everywhere in every way. Like every founder wants, unfortunately. That'd be fun if we had infinite money. But that's kind of the tension we see in growth stage.
Great. Thank you. Renata, diverse teams outperform, right? That's proven statistics. It's not something I'm making up. It's also our investment thesis. So I have a two-part question for you. Diversity and inclusion have become very important topics in the tech industry. So how do you consider these factors when you evaluate potential investments in tech startups? And second, what steps are you taking to encourage and support diverse founders and or investors in the tech startup ecosystem?
Sure. Yeah, it's definitely a hot topic. I want to first probably say three things. The first thing I want to say, being a highly academic and probably very type A person, and running the firm with academics and data, is this people may take offense to this. We don't write charity checks. So this is not about checking a box because you're a diverse founder. This is not because you're a female. You are on a level playing field and evaluated just like any startup. But it's really being able to, one of the things we want to kind of break into is the issue with venture, and I'm sure you both will agree, it is a network. It is an insular network. So when you don't have the warm introduction, or when and then the other thing, unfortunately, with women, with female founders, is and I think it has to do with just being female, or we're double scrutinized. I mean, I think we really get asked really tough questions that are like more, this is very risky, whereas our male counterparts will be like, this is great. Where is your growth area? So we just get asked the same questions. And I'm a former female founder, so I know this. It's just it's asked differently. So it's really, and I think that's why Blazing Babes, we have this accelerator, because in order to support the female founders, how do you address a question appropriately when asked? How do you respond with grace, and how do you respond with data, and with here are my metrics, here are the customers I've acquired, here's my growth strategy, here's my go-to-market strategy, here's my use of funds, and really knowing your numbers and being attuned. So we want to have the coaching coupled with the looking for and looking for the female founders or the diverse founders. The one thing I will say, and this has a lot to do with the accelerators, is sometimes it's just a lot of us VCs see so many deals a week, and typically when it comes in, it's in a deck. So sometimes the deck isn't a robust deck that we're traditionally trained through Techstars or through Y Combinator or through ever. So it's hard to sometimes. We don't want to miss the mark. And it's kind of like that bias that we're used to seeing a certain deck, but maybe it doesn't have financial projections, or it's an early stage. Maybe it doesn't have certain things. So it's really taking the extra time to say, let's get on the phone, or here's an email, here's a list of questions, and see how they answer the questions. Maybe they have the data, they just don't know how to present it. So I think it's really having an open mind and being able to support the founders and not have that bias.
Great. Thanks, Renata. So next important topic, which you'll all agree with, risk and due diligence. So tech investments carry high potential rewards, as we all know, also high risks. So Lily, can you share some examples, one or two, when a tech investment didn't go as planned? What lessons did you learn from that experience that you can share?
Sure. Yeah, I mean, at early stage investing, there's obviously a level of risk. I forget what the stats are, but like 9 out of 10 companies are going to fail is sort of the tagline you hear. An example of a company that didn't work out in recent examples or in recent times. Again, as we talked about, there's things that shift. So market dynamics can shift, product changes, obviously, and then you have your team piece of the puzzle. In this case, we made an investment in a pretty technical company in the e-commerce enablement space, and there was an AI component to it, but it had a business model that required a different type of financing and a different capital structure. And we made the investment in, I gotta get my time right, in February of 2022. And by May of 2022, the world changed from many perspectives in terms of the slowdown, and that was affecting e-commerce generally, from the financing landscape, from investors' risk appetite. A lot changed. And it changed so quickly and in a way that, perhaps the founders could or should have responded a little bit faster in terms of our spend management, but it was really nuanced. It was sort of a question within a couple of weeks. And so we got over our ski tips in terms of how quickly we hired, because we had growth and momentum, but these shifts, affected us dramatically. And so being able to, I think one of the hardest things for early stage companies is managing investing in growth. What's the right pacing? How do you read the tea leaves, particularly at the earliest stages of, should you make that, should you be, is that real product market fit? Is that real pull? And therefore it's okay to spend that capital and invest behind that, versus being cautious. And you can't be too cautious because you'll miss the boat, you'll miss the window, and you got to take some risks. And so this is an example of, we sort of, I don't want to say we misread the tea leaves, but the tea leaves changed really fast. And, we got ahead of our skis from a funding perspective, from a spend perspective. And so we had to recalibrate and reorganize and, cut spend dramatically and let some people go, which was super painful, and reorganize ourselves. Which would, the credit to the founders, they were able to do that and hunker down and get in kind of cockroach mode and focus on the product, and we're able to kind of reemerge in a different light. But it's tricky. So that's an example of kind of market shift, financing, capital markets shift at the same time, and it was kind of a double whammy that was very hard.
Thanks, Lily. So Mark, what strategies or methods do you employ to assess risks associated with disruptive technologies, especially in industries that are evolving?
Yeah. I'd say the most important thing we do, and the benefit of working at a really big place with a lot of people with a lot of networks, is we talk a lot about an investment committee. Have you talked to the person that knows the most about this? And how confident are you that you have found the person? Sometimes that can create tension in the firm, if others believe there's somebody else, but I think it's a healthy tension. We constantly, when you have conviction on the founder, you've conviction on the space that it's large enough, all this sort of stuff, and then we kind of go on this hunt to find the person. And the more and more esoteric that market is, the more and more difficult it is to find that person sometimes. Like in cyber, I feel quite confident to be able to find the person. But if I'm, for instance, investing in manufacturing technology or inputs into manufacturing, I'm not going to have that person on speed dial. So then we as a firm kind of use the teamwork to go and find that person, and we're very fortunate to be able to do that. But I think that the disruption piece, and the last part is, we have gotten burned by this before. Investors are not the people that know the most. The people that know the most are the people that live it and breathe it, and are using it, and live and breathe these problems on a daily basis. And they think about things that you will never think of. One of the things that can be very, very difficult is weighing all of the inputs that you get from all these places. And investor input is important, but investors know how to talk to investors and know how to talk their thing up. And people who live and breathe it every day, that do not have economic interest in the business, but want to see the industry grow, those are the most important people. So that's the disruption piece. That is the most important thing. That is the thing we spend all our time on. It is hard, and we get it wrong just as much as we get it right, because it is 9 out of 10 fail. But we try as hard as humanly possible to find that person.
A quick
Yeah,
add
go ahead.
on the talking to people, also references on founders
100%.
is a really important piece. So when we always talk about, most of your diligence, or in our case, is outside in.
Yep.
And so whether it's target customers or the expert who knows the space, or diligence, reference calls on the founders. Because again, going back to team, they might present really well, or they might, showcase, but digging into what are their strengths, what do they have, what it takes, things like that is another big piece where we've gotten so excited about an idea and the references are meh, we'll pass. Yeah,
For sure.
Great. Now let's talk about tech and venture predictions. Okay, this is going to be the loaded topic, I guess, of this hour. But before we do that, Let's talk about existing tech trends today. Okay, so don't look into the future, just today, based on, so for example, I invest in deep tech. And life sciences in this ecosystem, for example, saw a huge investment before and through the pandemic. But after that, right, it's seeing a little bit of a correction. But we've been seeing, on the other hand, climate tech investments for like, or startups rather, for a long time. And right now you're seeing the investment in those startups picking up. So I'd love to see or hear from the three of you, right? What are you seeing in terms of the deals coming your way today? Don't look ahead, but just now, right? Versus maybe a few years ago. What's new, right? So Renata.
So I'm going to definitely say femtech. So femtech, we just did a great analysis on what's going on with femtech. The reason why it's so great, and it's basically money left on the table. And this is nothing against the male VCs, but no female founder who is in femtech is successful pitching to men because they don't get their periods, they are not having the babies, and they're not having fertility issues or breastfeeding issues. So it's a huge untapped area for female funds that are focused in femtech. The valuations are compared to normal current day are higher, and the exits are faster. I think the average is 4.5 years. So if it's a 10-year fund, you're going to return that fund if you bet on a winner.
Great, Mark and Lily.
Well, I'll take the cop-out answer. We're seeing more AI companies than have ever been. I think the number as a firm, I think we've seen over 600 AI pitches in the past 6 months. We have a lot of people, but that's there have been 600 man hours done on AI pitches, I would say. We've done very, very few of those deals. I have opinions. We'll do the predictions later. But I would say certainly seeing a lot of AI stuff. And then I would say the second thing that we are seeing, which is I'll just describe it as a broad theme, sectors that were not venture backable before are now becoming more venture backable, if that makes sense, because of the shifting way of this world. So we went from a world of unbelievable globalization, zero interest rates. We trade with everybody. We trust that everybody is going to be able to do things. We have a pandemic, rising interest rates, war, and nationalism in a very, very real way. And that's not just in the United States. Look at what's happening in a place like Israel, which is an amazing tech ecosystem, but might shoot itself in the foot. There are things that there is defense, which I would say when I started in this business, you bring a defense company, that's a really good way to get nobody interested. Manufacturing, we are going to have to rethink manufacturing. We are going to have to rethink supply chain. We're going to have to rethink environment and all those things. And those are lots of capital, lots of really difficult problems, and where you spend all your time. Really good places where really, really big companies are going to get built.
Great. Lily.
Not too dissimilar. I think I don't know if I have the absolute number, but 85% of the pitches we've seen year to date have some type of AI mention in the deck. I think part of our job is parsing through what is noise versus what is exciting there. We see a lot, obviously, in the generative AI side of things around content and photos and video creation. And I think what we get interested in there is the specific use cases of that and what's going to make that interesting. So, for example, Goldcast, the product that we're on, is one of our investments, and they've launched a content AI lab. So you can take an event like this and generate videos that marketers can then go use in future opportunities. So we're certainly seeing a lot, and parsing through the noise is a big piece of that. We do spend time in thinking through, in a world where everybody's adopting AI at some level in their business, which we think most people will in some capacity, and whether it's on a product feature level or a workflow level or a core product level or a data creation level, what is the tooling that is going to be needed around that and that adoption? So we're spending a fair amount of time on the tooling around that and the infrastructure around that, whether it's around observability or areas like that. Similarly, I personally spend a lot of time in what we call dusty industries. So, vertical industries like insurance, like supply chain, like manufacturing, like construction, that are still really early on their digital transformation, if you will. And because of the enablement of new software and technology, there's a lot more that can be digitized. And then there's a whole bunch of things that need to come with that. And then there's a whole bunch of data that's going to come out of that digitization. And so, for example, I spent a lot of time in InsurTech. We have two great companies here in Boston in our portfolio in insurance. So those are some of the areas that similarly I feel like have come online, if you will, or are about to come online. And then there's going to be a whole host of things that you can do around that. So that's where we get excited.
Great. Now I have a quick poll for you as we look ahead into the future. Can we run that if possible? But while we are doing that, so this is primarily the poll is around which disruptive technology do you think, audience, will see the most innovation and investment over the next 5 years? Okay, so that's the poll. Those of you who can vote, please vote so we can see your answers. But while we are doing that, panelists, let's turn it over to you. So Lily, maybe I'll start with you. How do you see disruptive technologies like some of the above that can reshape industries, as you're seeing some of it today, influence your investment decisions and impact the investing landscape? So paint us a picture of how the Boston venture landscape will evolve over the next 5 years.
So I think there's a couple ways to answer that question. One of the things that I think we're in early innings of, but you see certain firms doing it, is just there's two buckets. How does venture get done? So like, what do venture firms look like? How do we make decisions? How do we process information? I think we're going to see more automation and data-driven approaches to the active venture, like the stuff that we do every day. I think that will change and look pretty different. And there's parts of whether it's sourcing or it's, diligence processes or finding that person that you need for that expertise. I think there's pieces that could, should, and will get automated away in a way that's probably a good thing because it gives us more time to do the things that we uniquely can do. So I think that will look different. I think that will commoditize some parts of the day-to-day job of venture. And so I also think we're going to see a shift in the venture industry around the types of firms that exist and what they're really good at. And I've spent a lot of time talking to LPs and they're thinking about this as well. And my thought is that I'm seeing some gravitation towards you either have a General Catalyst type model where you have multi-stage, multi-product, large funds. And then I think you see more and more small specialist funds, kind of like what Renata and what we do at Underscore, where you are narrow and pretty good and focused at very specific things. I think being in the middle is tricky because you're kind of competing on both sides and figuring out what is your edge going to be in a world where founders have choices. I mean, I think there's 4,000 venture firms in the United States. There's 2,000 seed firms or something crazy. And so it's interesting because I think a lot of times founders say, oh, it must be so fun being a VC. You just pick off the best deals and like it's very competitive. I don't think I've ever worked harder in my life. And figuring out as a firm builder, and you're doing the same thing, like what are we going to be great at and how are we going to compete and why are we going to get selected by the very best founders and how are we going to find them and things like that. So I think we're going to, because of both the competition and the technological advancement, I think we're going to see how venture gets done change. And in some ways get more automated and in some ways get more specialized or become a real platform like a General Catalyst.
Great. Renata, your thoughts and also how do you see the landscape outside of Boston?
Sure. So let me start with, yes, there's going to be automation. And actually, Alexis Ohanian with 776 has a software that he's built, obviously a software guy, to automate how to team up the advisor with the portfolio company. So, and tracking how long they work together. So it's actually already being done. I know this because I'm an LP in his first fund. But what I think in terms of venture overall, like US venture, I do think there's a lot of, over the past 5-6 years, there's been a lot of change in regulation on the definition of accredited investor. So trying to get some more women and minorities involved in investing. I know we always see the Kickstarter, we see some of the crowdfunding. There's a huge surge of angel groups popping up with special purpose vehicles. There's on every single city, every single suburb, you see of an angel group. So people are really wanting to get the smaller checks in venture. So I think there's going to be a huge shift in the next 5 years from a federal government regulation standpoint of that definition. I also think, what was the other thing I was going to say about shift? I think that's pretty much it. I think it's from a high level. And I also think this is one interesting thing there was a huge shift where some of the bigger funds, and I don't know if General Catalyst did this, but micro funds, some of the bigger funds want to get into that untapped, just female founded fund or, minority fund. I mean, that was a huge thing. I don't know what's going on right now, but I think there's going to be some of the larger funds they actually want to get, some of the access to the money that's being left on the table, and they can't do that with their larger funds. So I do think the sub funds, the fund of funds is a trend that's going to happen, targeting certain sectors. So yeah, maybe I can be the big fund, but I want to get micro funds and have a GP manage that.
Great, thanks. And Mark, global landscape. The tech industry, obviously, as we know, operates on a global scale. So besides sharing your thoughts on the topic, right, how disruptive technologies are shaping the global investing landscape, share insights on also how you navigate the geopolitical and regulatory challenges when considering international tech investments.
Sure. Try to do those separately. So I think similar to Lily and Renat, I think we have made the decision to be a platform, and being a platform means that we have to work on our business, and we talk about it like there are athletes that do multiple sports inside of our firm, and they have to be the best at their individual sport. Like, we have people who have to be the Lily of General Catalyst. Like, we have those people, and then there are people like me that bend a little bit more growthy, and then there are all those sorts of things. So we have to think about our company not too dissimilar from our founders. And frankly, that's where we learned a lot of the things and we are a work in progress, just like our companies are. And so I would say, like, we think about automation, we think about all sorts of different things to try, especially, and like, we frankly look at our early stage portfolio, like, if we just did a scraper and kind of just source that way instead of like sourcing through our networks, is that better and less biased than other things? Like, we put ourselves up against that. It's hard to do, like, really in a robust way, but it's like we are constantly trying to do those sorts of things. I would say, in a global perspective, look, the changing geopolitical landscape, the changing landscape of tech, the ability to create a company anywhere, anytime, with any sort of people, and build a scaled company unbelievably remotely, means that we have to be everywhere at all times. It also creates opportunity for us, right? So geopolitical and changes in policy, changes in like kind of how we do business, those create opportunities and those create companies. We think about it a lot. We hopefully are on the right side of history there with our investments, but we certainly and like, look, as I just highlighted in the last question, like, we are investing behind this global resilience change, whether it's Europeans being resilient against whatever kind of they used to be dependent on and now they need to change it, or the United States becoming a manufacturing hub again in the world, and a net exporter, like actual exporter, all those sorts of things. So like, I think we think a lot about it and we work on our business every day. It's one of the things that some people call it a tax on their time at GC, but otherwise we think it will continue to build the platform and hopefully create a place where founders want to come.
Great.
Can I just say something
Yeah,
real quick?
go ahead,
I
Renata.
forgot I neglected to answer the second part of the question about the different climates in,
Yeah.
since I'm from Boston, but I've been in Chicago for 20 years, and I know the Chicago ecosystem and the West Coast, networking with the West Coast. So one of the things that at least the founders in Chicago for early stage have faced is getting those checks from a very conservative Midwest. Lots of money there, but unwilling to take, really risk averse. So they've gone to the coast. They've actually, not necessarily Boston, but New York and the West Coast for those first checks. Now, there's a lot of smaller funds popping up in Chicago, like M25. I know Victor, and they write smaller checks, but lots of checks. And they have really good connections with the East Coast and the West Coast. So they send the deals, the ones that are doing well, to the seed, to the Series A. Boston, I mean, I don't know the climate, if someone can speak to the climate in terms of early stage pre-seed, and if the founders need to go to the West Coast, and how do you facilitate that? But there's really opportunity. I'm really, I mean, I'm very loyal to the Beantown, right? But also coming from a medical family and really investing in femtech and wellness and being affiliated with a lot of the hospitals here, I want to be in the Mecca of Boston. But I do think the climate in the West Coast, there's more risk, willing to write those checks. And I think if we can somehow partner with the different sectors across the U.S. in terms of our firm. I mean, if you're a smaller firm, one thing, but even if you're a larger firm, or if you're a larger firm that's everywhere, syndicating with the smaller funds that are more sector specific.
Yeah, that's great. Did you have anything to add?
Well, just to
Lily?
speak to you asked about the Boston early stage ecosystem, and part of the reason why Underscore was formed back in 2015 was that there was a bit of a white space in the early stage venture landscape here in Boston. Venture was born in Boston, and I think people sort of forget that. But 128 and the earliest firms were built here, and then obviously there was a big gravitational pull west, and then sort of New York. Anyways, in the sort of mid-teens, there was a white space here, and that's part of the reason why we were built, was to go after that, because the thesis was that there's incredible talent here, there's great technology here. It shouldn't be that people have to go west to go get that early stage funding. And I'd say GC's been one of the few that sort of have stayed strong of the platform firms here in Boston. So that's why we exist. That's why we were formed, and there's several others that started at the same time, Pillar and Founder Collective and NextView, or others that we see sort of as peers in the early stage landscape. But I think there's a ton of activity here, and I think that the pandemic actually made Boston, I'd say, an even better ecosystem in many ways, because I think that West Coast VCs learned that they could invest outside of the West Coast. And so there was a time period, I think it was 2021, 75% of later stage investments done here were done by investors outside of here.
Oh.
And I actually think that's good, because it shows that you can stay here.
Right.
I think a lot of times you see people graduate from universities and say, well, in order to go raise, I got to move west. And I don't think they have to say that anymore. Both because hopefully folks like us can fund them at the earliest stages, and then they can go raise their A and their B from anyone, because that appetite is there. So I actually think geography, the pandemic has opened up geographical connectivity points. But I think a thing that's unique about Boston that I'm not sure that some of these other ecosystems have is that geography does matter here, because people physically come here to university and to be in the labs and things like that. And so I think it makes geography more relevant here in some ways that I think will keep it thriving as an ecosystem. And
Yeah. And actually, I don't know if this happens in your funds and if you can reveal this, but in Chicago and Illinois, there for LPs, the states are now investing in emerging fund managers, because they want to keep the money in the state. So the early stage money. So they have a mandate. I give you this money, 10% of this, you need to invest in a startup in this state. So I think we're talking about the shifting. I do think there's a big shift to try to keep people in the state and not move to the coast.
Great. Great answers, all of you. So the audience voted, as you can see. So, and it looks like AI, machine learning, and clean energy are tied. If you had to pick one, right, looking ahead, what's your pick, each of you?
Well, since I'm in health and wellness and food, I have my thesis, my assertion is a blockchain. I believe that a lot of our health problems with food, with our kids, I don't know if kids have celiac disease or aversions to gluten sensitivities. I think it's accountability with our food. So I believe the future, you're going to be able to go into Whole Foods, scan a barcode, and see the origins of the food, where the farmers are actually held accountable, and they've had to track how they cultivate the land, how they cultivate the soil. Do they spray the soil? What are the cows eating? Because I don't think that you walk into Whole Foods and something says USDA organic. We don't really know what that means.
Mark, Lily, your picks?
In the next 5 years?
Yeah, that's the question.
Next 5, artificial intelligence and machine learning, for sure.
Okay.
It's a slam dunk. We can't get out of our own way on energy and clean energy policy yet to be able to get the road.
Yep, we're going to get into that. The last question, Lily, your top choice?
I agree.
Agree?
I think it's
Okay.
going to be AI and machine learning. I wish that it would be clean energy and renewable, because I have 3 children under the age of 6, and I'm nervous for their future.
Yeah.
But to your point, I think from a policy perspective, a business model perspective, I think there's a lot of things that we haven't quite figured out. I do think that we're seeing a lot more activity there, and particularly actually in Boston, because of some of the technology. So I think that the current regulatory environment has made a couple of business models that weren't sustainable now are sustainable in the clean energy space. So I think that's good, but there's risk to that, obviously. So I hope we can figure that out. There's a lot of smart people working on it, which is great. There's a lot of smart people investing in it, which is great. But I think the slam dunk answer is the AI machine learning one.
Okay. Now, one last question for the two of you before we turn it over to the audience. So Lily, since you were just talking about AI, as AI plays an increasingly significant role in society, how do you approach investments in tech companies that might have ethical or social implications, both positive and negative?
Such an important question, and it's the good news is it's now coming up more and more when you make these investments. And for us, we've always had an ESG rubric part of our investment, both our memos and our scorecards. So it's a part of our investment memos. You have to talk about what are the potential ESG implications. And then also when we do our own scorecarding after an investment, there's a section on it. So you have to kind of give it a grading and give it a comment. So it's always part of our investment decision. It has been forever, but it's definitely shifted now a little bit. I think it's really hard, and I think it's something that it's both up to the investors and the founders, but definitely the investors, and we are hearing it from LPs around having accountability around those discussions. I think part of the challenge is that we need to catch up from a tooling perspective to help monitor some of this stuff. So I think observability around which models were used, how they were trained, what do you know about them, what do you know about that data, where it came from? Like a lot of that stuff is being built now that will then enable us to be able to have more transparency into some of the risks around these investments. So I think that my hope is that the conversations keep happening, the accountability keeps happening, and then the technology allows us to be better informed real time around making some of those decisions and monitoring them. But there's certainly a ton of risk around some of these factors that I think what's going to be challenging is how do they get solved sort of within individual firms? How do they get solved as an industry? And then how do they get solved nationally and in terms of policy? I know this week there was the first, what do they call it? AI. It's basically like an info session essentially for senators. And they invited all the top AI.
Must be nice to have that session to be a senator as your AI.
Exactly.
teacher.
And so, but as I look at, anyway, I won't go down that road. Anyway, we need folks who are making policy decisions to get educated and figure it out.
And great, thank you. And Mark, just to finish it up before we ask the audience, how do you approach success criteria when it comes to ethical practices versus fund performance?
So I think I don't think you meant to phrase it this way, but I don't think those two things need to be in tension. And we fundamentally believe that when those two things are like when we think responsibly about how we innovate against things, like those are the companies that are going to continue to accrete value and continue to be platforms and have the right to do more things. It is similar to Million_. It is in every single one of our memos. We do not wire money unless somebody has articulated very, very specifically how they have spoken about and what they believe this founder is going to do with regards to. We have a responsible innovation framework. We've been pretty loud about it. We put it out in the world. We tell our LPs about it. We report on it. We go back and forth. It does not mean every single investment is going to be both altruistic and unbelievably good for society in terms of like reducing carbon emissions. Those are the obvious ones. You build a social network. Are you thinking about the unintended consequence? That's the super easy other side of the spectrum. We have conversations with a lot of cyber founders about like, what are you going to build? Like, are you like, what if you find something? Are you going to use it for business purposes first and then not release it to the world? How do you think about that? And then AI, we are having an unbelievably, I would say, aggressive debate internally with a lot of people a lot of partners are very, very excited to do AI deals. And then we ask the responsible innovation question in front of investment committee, and like, there's not a really good answer. And then there's a lot of really good answers for everything else. So we've had some fairly robust discussions, and we've said no to some things because that person clearly does not care about that. So that's how we think about it.
Great, thank you all. Now let me turn it over to you. Audience questions.
We only have time for one or two.
Yeah, one or two is good. Sorry, all. We ran long.
Wow, I'm one of the lucky ones. Okay. Hey, I have a question for all and a comment to Renata. I'm Latina too. I'm from Babson, so anything I can do for you, please let me know. And for you, what kind of traction does a pre-seed company need to have for you guys to look into their business?
So for us, we've invested as early as 2 people on a deck. So we've definitely invested pre-product and pre-customer traction. I'd say at seed stage, our dream seed is sort of has product live in the hands of paying customers. Is how we articulate it. But again, we've gone much earlier. At pre-seed, I think what I care most about and what we look for, again, is it's a uniquely qualified founder. And then what have you done to accelerate your learning about the problem you're going after and why your solution will be the right solution? And there's lots of different ways to do that. And so whether it's, I've spoken to 700 target customers, and here's what I've learned. And I've put this wireframe product in front of them and they've engaged in it in this way. And here's what I've learned from it. So it really varies, but I like to see the scrappiest, fastest, most rigorous path of learning to validate a value proposition. And basically, is there a there in terms of the problem I'm solving and that my solution is the right one to solve it?
Actually, can I just pipe
Yeah,
in?
go ahead.
Coupled with that, because I'm a big new product development person, I love voice of the customer, even if it's 50 customers, testimonials. But this may not be a popular answer. I actually really, at the pre-seed, I like to see a financial projections, and I care less about the numbers and more about your assumptions. So do you think you're going to get Walmart? Why? Oh, because one of my advisors worked there. Or I just want to see what, you may not have a CFO, but you may have somebody on your advisory board that has connections. So I just like to see that someone's thinking and has a plan for those customers.
At pre-seed, we'll look at any stage of like what you are. I would say there's two things. The obvious pre-seeds are when someone is so passionate about something that they have done everything that Lily and Renata just said, and they've burned the boats. They've quit their job.
Right.
It is all consuming. Not everybody has the ability in their personal life to quit their job. So like we spend a lot of time making sure we like try to root that bias out as much as humanly possible. But are you spending a disproportionate amount of your time on this thing? Has this captured your imagination so that you are doing something all day, every day, as much as you possibly can to do that? Weekends, nights, those sorts of things. That's what it's going to take to build a successful company, unfortunately. It's not easy.
So do we have time for one more, or we're out of time?
We're out of time.
Okay. All right. So that's a wrap, folks. And I just want to thank Startup Week Boston and our wonderful panelists. Hopefully you get a chance to ask them more questions after. And yeah, so thank you for coming.